So it's a bit of a monster week coming up for financial markets. In many ways, you could argue it's a make or break week for the equity bull case as we move into the final stretch of 2025. But it's starting on a positive note with some trade optimism sweeping across financial markets. Equity futures stateside about 1% higher if you look at the S&P and the Nasdaq in early deals. And that comes after the weekend US-China trade talks in Malaysia appeared to reach a successful conclusion, with Treasury Secretary Bessent saying that there is now a framework for President Trump and President Xi to discuss and potentially sign off on at their meeting later in the week on Thursday. That is, of course, one of the major events to keep on the radar this week, but there is many more besides that. In terms of G10 policy decisions, we hear from 4 of the G10 central banks this week, with both the FOMC and the Bank of Canada set to deliver 25 basis point rate cuts on Wednesday. Meanwhile, on Thursday, the Bank of Japan and the ECB, they are both likely to stand pat on policy. The Bank of Japan will probably indicate that if their outlook is realised, they will tighten policy further, despite new PM Takaichi's reluctance for the BOJ to raise rates even more, while the ECB are likely to reiterate that they are done and dusted in terms of monetary policy action for this cycle, with the deposit rate set to remain at 2% through to the end of next year. That's not all, though. We do have a busy week of corporate earnings in the mix as well. 5 of the Magnificent 7 set to report, including Meta, Microsoft and Alphabet after the close on Wednesday, followed by Amazon and Apple after the close on Thursday. But it's a much busier week besides that. We've got just over 40% of the S&P 500 by market cap set to report earnings this week. It is by far the busiest week of Q3 reporting season, and it's going to be a busy week of economic data as well. Though the government shutdown continues stateside and we operate in a data vacuum there are plenty of releases on this side of the pond, including the first read on Q3 Eurozone GDP, as well as the flash Eurozone inflation data for October as well. If you consider the equity bull case this year, it's been built on a resilient underlying economy, robust earnings growth, a looser monetary policy backdrop, and a cooler tone on the trade front. We can certainly put a tick in the last box, it would seem. We will look throughout the week to see whether we can tick off those other 3 boxes, and if indeed we can, that likely points the path of least resistance to the upside as we move into the final stretch of the year.